In today's Property Insider Chat, Dr. Andrew Wilson and I discuss the latest My Housing Market report for the end of February, and it shows that our housing markets have started the year off quite strongly. Clearly, the markets are fragmented, with some segments doing much better than others, and we'll go into depth in that in my discussion with Andrew. But before we get going, if you want to keep up to date with the latest in the housing markets, please subscribe to this YouTube channel and click the little bell icon so we can let you know each time a new show comes out. We're now at the end of February, the end of the second month of 2024, and a good time to assess how our housing markets have kicked off the year, and hopefully it'll give us an indication of what's ahead. So I look forward to my chat with Australia's leading housing economist, Dr. Andrew Wilson, Chief Economist of My Housing Market, to get their latest data for the quarter up to the end of February. Hi, Andrew.
Good morning, Michael, and the latest data, as you suggested, hot off the press from My Housing Market for the February quarter. So we're measuring the 3 months to February compared to the 3 months to January. And if we look back, we know that those January results were generally flat. No surprise, January, of course, is a holiday month, so we do get fewer sales volumes, and we also get a lower proportion of higher priced properties over that period. So we do see downward pressure on prices, even though our models do adjust for seasonal factors. No surprise that we had a lower result over January. And of course, we had seen the rate of growth, which was certainly quite strong through most of 2023, starting to decline at the back end of the year. No surprise there with higher prices and the satisfaction of a lot of the pent-up demand. But the market's come back over February, and we're recording growth again. The national house price, national capital city weighted average house price increased by 0.8% over the February quarter compared to the January quarter to now $1,094,943. And the national house price is now up by 8.9% over the year ending February this year. So back in town, house prices, Michael, and the national house price has resumed its upward trend, and that's the 12th monthly quarterly increase of national house prices over the last 13 months.
Well, obviously our housing markets are fragmented and each state's running its own property cycle, and we'll get into that in a moment. But even though you said 0.8% and some people are saying, oh, that doesn't sound like much, clearly if it compounds over a year, that's still very significant growth. We've also in our weekly Property Insider chats discussed the depth of our auction markets, with still good results coming in despite very many more properties going up for auction over the last couple of weeks.
Yes, look, it's been a strong start to the auction season over February, Michael. We've actually had record sales for this time of the year, coming from very high record listing volumes, and clearance rates are still in favour mostly of sellers. So still strong competition for available property from buyers. And of course, we're not seeing that translated completely into the latest price data. But if our auction market performance continues, I'm sure we'll see continued price growth over the next few months. But certainly a good start to the year for homeowners. As you mentioned, that 0.8%. If we annualise that, it gets us to just under 10% price growth, which was similar to what we had last year. A lot of water to go under the bridge, of course, before we start looking at that, but certainly it's a good start to the year. But as you mentioned, the market is fragmented to some degree. Every capital city recorded higher prices over the February quarter, with the exception of Melbourne, which was down just by 0.4%, and Canberra down by 0.6%. No surprise there. Canberra's been a little bit of an underperformer over the revival of the past year, Michael. And Melbourne also has been dragging the chain. Melbourne house prices are still around 4% lower than their previous peak, which is 2 years ago. So there's plenty of upside and value opportunities in that Melbourne market. But as we've discussed with the latest economic data, that Melbourne still has some problems in terms of the performance of its local economy, with lower wages growth and lower average incomes. And certainly these are factors that perhaps unsurprisingly are impacting housing market performance as well. But I do think it's a confidence issue, and that there are good value opportunities in Melbourne, and I think that will help to revive the market this year. The strongest performer was Darwin over the year. Volatile Darwin, of course, is a seasonal market to some degree. It was up by 6.8% over the month. But the other markets, no surprise, Perth and Adelaide Strong performances, Perth up 3.7% over the month, Adelaide up 3.6%. And they've really been leading the charge along with Brisbane. Brisbane house prices increased by 1.4% and Hobart up 1.3%. So most capital cities recorded higher price growth over that February quarter compared to the January quarter. And when we look at the annual results, Perth again, the leader there, up by 22.3%. Annual prices growth, Michael. Brisbane up 14.5% and Adelaide up 13.9%. Sydney up 8.9% over the past year and Melbourne up 2.5%. So certainly Melbourne and Sydney are tracking behind Brisbane, Adelaide and Perth.
Okay, that's the house market. What about apartments?
Similar to houses, unit prices were generally higher over the month in most of the capital cities. An exception was Melbourne, down 0.9%, and Hobart, which has a very small unit market, down 7%. The top performer was, again, Darwin, that volatile Darwin market, up by 8.2%. But again, the leader of the, I guess we say the major capitals was Perth, up by 4.9% over the month, Brisbane up 3.2% and Adelaide up 2.1%. So more strong results from, I guess we could say, the big three in terms of housing market performance over the past year. And when we look at those annual results, we can see that Adelaide's leading the charge, up by 20.7%, Perth up 19.5%, and Brisbane, that strong Brisbane unit market, up 16.5%. So similar results over February, Michael, to houses for units, and similar results when we look at the breakdowns that certainly Brisbane, Adelaide and Perth have a head of steam up, which they've really been driving that market for the last 12 months. And but Sydney's still performing positively, certainly not at the rate of the other capitals, and Melbourne, the underperformer of the capital city markets.
I just wanted to remind you that this is not specific investment advice because we don't know your personal circumstances, but we're more than happy to have a chat to help you take advantage of this new property cycle. If you think about it, the opportunity like this to get set at the beginning of a new property cycle doesn't happen very often. So why not have an obligation-free chat with my team at Metropole to discuss your goals and to discuss your options? We're much more than just another buyer's agent. We help you safely create intergenerational wealth through property. We're big enough to tip the scales in your favour, but still small enough to care. And as we don't sell any properties, our advice is independent and unbiased. Now remember, property investment's a process, it's not an event, so you can't just go out and buy any property and hope to be successful. In fact, now more than ever, getting the right advice is critical. So if you're looking to invest in property or buy a new home, go to metropole.com.au and have a chat with our multi-award winning team. It's a great feeling having the team at Metropole on your side, levelling the playing field. Well, as we spoke on a regular basis last year, we saw the recovery month after month in 2023, and you pointed out that things were starting to slow down, particularly in Sydney and Melbourne last year. You were first commentators I know of pointing that out. So now that we've started 2024, what do you see ahead for the coming year?
Well, certainly, I still think that there are positive prospects for Sydney and Melbourne. As I mentioned, Melbourne's still below where it was 2 years ago. So is Sydney, Michael, down by about 1%. So there's still value opportunities in that Sydney and Melbourne market. Of course, we know our housing markets generally are chronically undersupplied. No prospect of dwelling starts, of new dwellings catching up with that undersupply anytime soon, if ever. Of course, we still have very strong migration, and those record tight rental markets with low vacancy rates and higher rents are certainly going to prove attractive to the housing market for first home buyers and investors. But as I said, still value opportunities in Sydney and Melbourne. I think that will eventually get Melbourne off the ground and continue to fuel that Sydney market. But there's no doubt that Perth, Brisbane and Adelaide, got to remember, Michael, when we did look at that economic data that showed comparative incomes and comparative wages growth, there's not a lot of difference in terms of the incomes of the capital cities, exception perhaps Perth and Canberra. So they do have those affordability advantages with similar incomes, which means that there's prospect for higher prices going forward. And I think that will continue to put upward pressure on prices, particularly in those markets. And of course, we still have high migration fueling demand. And we mentioned the auction market, and that's certainly been a leading indicator of rising market activity over February. I guess the big picture in terms of underlying drivers is that lower inflation has certainly meant that the outlook for interest rates is more benign compared to where we were last year. Also, we still have a strong economy that's driving record wages growth. So plenty of positives there for the prospects of the housing market this year, Michael.
Well, in summary, there are unknowns ahead, but there are, I think, a couple of certainties. Inflation is going to stick around a bit longer than the Reserve Bank would like, and inflation is one of the things that drives up hard assets like property. As you correctly said, interest rates are going to eventually fall. We're not sure when. There's clearly a scarcity of dwellings, both for purchase and rent, and rents are going to keep rising. And I look forward to your monthly rental report shortly. And I think the other thing is the outstanding good demographics, the strong population growth is going to be fueling demand for housing. So there are quite some certainties that mean over the medium to long term, our housing markets are going to do what they've always done. Well-located properties are going to keep increasing in value as Australians want to buy their homes.
And we've certainly had a very positive start to the year, Michael. Now that we're well into the real season, I guess we could say we're onwards and upwards, and really no sign of tracking backwards in the markets overall.
Great. Well, thank you for being first, as you always are each month, to give us an indication of what's happening. I think it'll give our viewers some comfort that we're going to have another good year in property. Look forward to catching up with you next week for our regular Property Insider chat.
Yeah, thanks, Michael.